Chevron's 401k is a powerful and tax-efficient way to build wealth. Hi everyone, my name is Stephen Chambers and I'm a wealth manager at Willis Johnson & Associates. And today I want to talk to you about how to optimize your ESIP, coupling it with the Mega Backdoor Roth strategy. Okay, so this year, for those under age 50, $69,000 can be contributed to your 401k, no more. And that's broken out into three different sources. The first source is the Chevron match, which for everyone who contributes to a 401k is subject to income limits. And this year, the income limit is $345,000. So based off Chevron's 8% match, the most match that you could potentially receive is about $27,600. The employee contribution limit this year is $23,000. That could be pre-tax or Roth. And then what's left is $18,400, which can go to the after-tax source. The after-tax source, how does that work? It's similar to the Roth, but it's also different. So any earnings on the after-tax money is subject to ordinary income rates upon distribution. Okay? But there is a way, hence the Mega Backdoor Roth, to get tax-free earnings on the distributions. And that's by rolling the after-tax money from the 401k to a Roth. Now, I know what you're thinking. Don't I make too much money to contribute to a Roth IRA? Yes, but there are not any income limitations to roll the money from after tax to the Roth. We do it all the time. It's completely legal. There are some pitfalls that you want to avoid, and we'll add some links in the description below to follow up and read more about that, but it's a completely viable strategy, and we'll talk about why you should do that in more detail. If you're interested in contributing to the after-tax source in your ESIP, log on to Net Benefits, click on the Contributions tab, and make your elections here as follows. Quick note, there's two different types of after-tax. There's basic and supplemental. We want to avoid the basic at this point. We'll talk about that in a different video. But for now, just note you want to contribute to the supplemental source. So why contribute to the after-tax in your 401k versus, let's say, a taxable account? Well, in a taxable account, interest, dividends, realized capital gains are all subject to taxes in the calendar year. Whereas with a Roth, again, the point of contributing to an after-tax source in your 401k is to mega backdoor it to a Roth. Inside a Roth, interest, dividends, capital gains are all tax-free. So the reason you want to do after-tax in your 401k is ultimately because it will end up in a Roth, which is the most tax-efficient investment vehicle. If you enjoyed this video, follow us on social media for more educational content.